So hi guys, now in this session we'll have a power pack session of 45 minutes to 1 hour max, and we will revise Indian Partnership Act, all the key concepts. So I have this important questions for Indian Partnership Act. Instead of teaching you from scratch, we will do this. Those who want to watch detailed videos, in description of this video we have 5-6 hours full revision of partnership. Recording students can go and watch that detailed videos. Now 45 minutes to 1 hour, all the important concepts from 3 units I'm going to do. I'll go in the same order. Case where there is no partnership, Shantiranjan Das Gupta versus Dasrayan Murzamul. In Partnership Act, first know the definition and memorize the definition of partnership. Partnership is the relationship between two or more persons who have agreed to share profits in the business carried on by all or any of them acting for all. From this definition only, true test of partnership, section 6, breaks out into 3 points. Partnership is an agreement between persons who have agreed to share profits carried on by all or any of them acting for all. That's where you get this concept of mutual agency. Let me ask you simple questions. Now, I'm starting charitable business. Is it partnership? No. Why? We are not sharing profits. Intention is not to make profits. Partnership is agreement between two or more persons. Can those persons be artificial judicial person and natural person? Yes. Two companies can join and become a partnership. Next, such agreement, should it be oral or writing? Can be oral, can be writing. Just like Contract Act, agreement can be oral or written. Then agreement to share profits. Can I say I will share only profits, no loss? Generally, when I say share profits, profit includes losses. And what is mutual agency? If one partner takes a decision, it binds the entire firm. Are you guys following? So this is partnership. In this, Shantiranjan Das Gupta says, in Supreme Court case law, they are saying, if the following 4 things are missing, then it is not a partnership. Why this is important? Because in partnership, registration is not mandatory. Since registration is not mandatory, these 4 things they will check. There is no separate books of accounts, no separate bank account, no terms and conditions between partners, no written intimation is made to the deputy director. That means what? Basically they are trying to say no separate bank account. Now in partnership name there is no bank account. Sorry, no separate books of accounts means they don't have separate books of accounts for maintaining profits, etc. No separate bank account. In firm's name there is no bank account. No terms and conditions. Now partnership deed illa. And if no intimation to deputy director, they did not register the firm. So they are saying you didn't register, don't have deed, don't have bank account, don't have books of accounts, don't call it a partnership. Are you following, guys? Clear? So if two friends come together and do business without using their personal account, not maintaining proper accounts, no deed, no intimation, it's not a partnership. Are you following, guys? Now, going back to definition, Swiggy delivery agent is sharing profits of business with Swiggy. For every delivery, he gets one commission. Correct? Can I say Swiggy delivery agent and Swiggy are partners? Swiggy delivery partners. Why? Here, they have agreed to do business together. Swiggy and it. They are also sharing profits, but there is no mutual agency. Are you following, guys? This is the first concept. Case where there is no partnership. Next, partnership versus any other form of entity. Partnership versus HUF, partnership versus club, all of that, just go through difference, have a rough idea of the points. If you know what's the club, what's association, etc., this rest will come. Over here, let's take just one difference. What is that small one, guys? Small. This is difference for which and which? Partnership and joint stock, or no, not partnership. It's LLP. So LLP versus partnership. I'll just tell you one difference. LLP versus partnership in the study mat, if you take, there are about 16 to 17 points. Correct? 16 to 17 points. For that we have a mnemonic. So one difference. Anyone already wrote this? Wrote this? No. Okay, what are the points of difference? Just tell me, guys. LLP and partnership, what are the points of difference? Separate legal entity, then mutual agency, then annual, limited liability, then legal compliances, minor is a separate thing, minor, okay. So M can be mutual agency and minor. Then next point, just tell the book points. Next, act, body corporate, creation, designated partner. Next we have perpetual succession, CS, common seal. Next, foreign partnership, NR. F stands for FS, foreign LLP, NS, RS, registration. So these are the differences between LLP and partnership. To quickly finish this, guys, S stands for separate legal entity. LLP has separate legal entity. Partnership, no separate legal entity. MS, mutual agency and minor as a partner. So minor, I'll come to that later. Minor as a partner. Next, AS, annual filing. LLP has concept of annual filing. Here we don't have concept of annual filing. L is again limited liability. Partnership unlimited, here limited. Then A, Act, Partnership Act, LLP Act. B, body corporate. LLP is body corporate. Partnership is not a body corporate. C is creation. LLP is created by LLP Act. Partnership, not Partnership Act. D is designated partner. There are two DPs here, nothing. PC, perpetual succession. There is concept of perpetual succession in LLP, not in partnership. And common seal. Common seal is there only for LLP, not for partnership. And F is foreign LLP. LLP has a concept of foreign LLP. N is name. LLP should use the suffix of LLP. Firm should use and co. R is registration. LLP it is mandatory. Partnership it is not mandatory. Also in LLP, go through the process of registration, guys. Now, this is the difference. How to remember mnemonic. When you were small, young, you were a minor. So when you were small, you learned ABCD and you wanted to have a PC. You didn't get that. You didn't get PC. And when you were small, you always had a dream to go abroad, foreign. So when you go foreign, you are a non-resident. Okay, non-resident. When you go foreign, you become a non-resident. Now I know all the points are easy, but how to remember the mnemonic? So what's my mnemonic, guys? When I am small, I am a minor. Minor is a point. When I am small, I learned ABCD. I always wanted a PC when you were a kid. You didn't get. Why? You wanted to go foreign. If you go to foreign, you become a non-resident. All points will come. Are you following, guys? Clear. That's it. This is, I just told you one difference. Rest you go through. Next, types of partners. We have types of partners. I'll just prepare a small table to understand types of partners. Capital, management, profit, loss, liable to third party, public notice. Okay, I'm just giving a small table, guys. First we have active partner. Active partner. Does he participate in capital? Yes. Management? Yes. Profit? Yes. Loss? Yes. Public notice when he leaves. Liable to third parties? Yes. Next we have Sleeping partner or known as dormant partner. Capital, yes. Management, no. Profit, yes. Loss, no. Public notice, because nobody knows he's a partner. Why should I give public notice? Liable to third parties, yes. Next, nominal partner is not a partner. He's lending his name. For example, Dhoni is my friend. He's lending his name so I can use in my firm. Example, guys. Okay. Next, capital, no. Management, no. Profit, no. Nominal partner, he's not a partner. Lending his name, use paniko en pera. Loss, no. Public notice, it's not clearly given over there. So liable to third parties, yes. You gave your name, so you are liable if something goes wrong. Yes, I understood. So that's why I am liable to third parties. Liable to third parties. So for safety, give the public notice. Because they are using your name, if you want to leave the firm, better give the public notice. Are you guys following? Next. Next is what partner? Partner in. There is one partner called partner in. Profit only. Capital, yes. Management, yes. Profit, yes. Loss, no. Public notice, yes. Liable to third parties, yes. Next, we have incoming, outgoing, leave it. Sub-partner. In sub-partner, is sub-partner going to participate in capital? No. Who is the sub-partner? If there are three partners, A, B and C, if you want to admit somebody, all the partners have to agree. But if some partners don't agree, I will keep a partner under me, D. So he is not a partner of the firm, but is working for me like an employee. So enak vara profit share, I will give him something. So if there are three partners, A, B, C, A, from his share he will give little bit to D. B and C are not bothered. So am I participating in capital? No, I will only pay to A. Management, no, I only work for sub-partner. Profit, from partner. Loss, no. Public notice, hey, you are never a partner. Why should I give public notice? Liable to third parties, no. Next, incoming, outgoing, leave it. Next is minor. Minor as a partner. Section 30. Is minor participating in capital? Yes or no? Depends on case. Management, no. Profits, yes. Loss, no. Public notice, yes. Section 30. You have to give public notice within 6 months or when you are having the knowledge to become a partner. And last one, liable to third parties, no, but up to limited up to the estate. We will see minor concept separately. Last one, partner by estoppel or holding out. Capital, no. Management, no. Profit, no. Loss, no. Public notice, you are never a partner. Liable to third parties, yes. So better don't be partner by holding out. Estoppel. Clear, guys? This is the second case, types of partners. Types of and third is types of partners. So we are done with Partnership Act Unit 1 and also types of partnership firms, you know. Particular partnership, general partnership, partnership at will and particular partnership, general partnership, partnership of fixed period, partnership at will. Will is no time, fixed period has a time, particular partnership for a specific project, general partnership for any business. Are you following, guys? Clear? Let me go to third unit now. Okay. Or let me go in order itself, guys. Subsequent profit of the partner. See, I am doing only important questions from this. Subsequent profits of partner. Section 37. What is this? Whenever there is going to be a outgoing partner. What are the cases of outgoing partner? Expulsion, death, retirement, insolvency. In all these cases, the outgoing partner has a right to claim what? Right to claim his share of profits, his share of profits, or he can claim interest at the rate of 6% on his share of property at his choice. His choice is generally whichever is higher. So are you following, guys? Whenever I leave the firm, in any of these cases, let's say I have to, this is the timeline I left today. Immediately money should be settled to me. If money is not settled immediately, after this, until the money is settled, until the period of delay, I can either claim my share of profits in the period of delay. If firm is having loss, I will claim interest at 6% in share of property. Are you following, guys? Whatever is payable in death, you will find amount payable to the partner, settlement amount on that 6%. Are you following, guys? Clear, everybody? Okay. Expulsion, section 33. This also we know. Examiner's favorite question. They will tell two partners, husband and wife, are fighting. Can you expel them? No. To expel the partner, three important conditions. There should be majority of the partners. Let me write the points, guys. It's basically 3 plus 3 points. First, for expulsion, must be exercised by majority. Good faith is the last point. Yeah. First, tell the 3 basic points, guys. Expressly stated in deed, section 33. Good faith again has 3 sub points. What is that? Must be in interest of the firm, then should be given notice, opportunity of being heard. So follow, guys. I can't just like that expel a partner. It should be done by majority voting. The power to expel must be expressed in the deed and must be done for good faith. What is good faith? Must be in the interest for the benefit of the firm. Give him a notice, an opportunity of being heard. Just for personal reasons, you can't send him out. Are you following, guys? Next, rights of an outgoing partner to carry on competing business. Can he do that, guys? Outgoing partner competing business. We already discussed in Contract Act. Agreement and restraint of trade is normally void, but Partnership Act has an exception. You can carry on competing business with reasonable restrictions. Correct? With reasonable restrictions, you can carry on competing business if other partners agree for the same. But even if they don't agree, the restrictions cannot be unreasonable. It has to be reasonable restrictions. Another point, outgoing partner to carry on competing. This only is there. Hello? Guys? Okay. Next. Let's take insolvency or death. Yes, reasonable thing is local limits, reasonable and specified period of time. Okay. Insolvency and death. Follow, guys. From the time partner dies, should he give public notice? Retirement, I have to give public notice. Death, should I give public notice? How I will give? I'm not alive. Okay. So no need to give public notice for death. From the date of the death, all the money, the remaining legal heirs are not liable for acts after the death. They are only liable for acts until date of death. That too liable only up to the estate available of the death partner. Are you following? When it comes to insolvency, when is insolvency taking effect? When is the partner ready to leave? When order for insolvency is passed. So when there is order is passed, adjudication order. When he is adjudicated as insolvent, only when the partner is adjudicated as insolvent, he will leave the firm. Correct? Yes or no, guys? Okay. Once he leaves the firm, firm is not liable for acts of the partner. Partner is not liable for acts of the firm after the date of the order of adjudication. Clear, guys? understanding. In partnership, I will leave only after order of adjudication comes. In LLP, I don't have to wait for order. The minute you file application for insolvency, you will leave. Are you following? LLP, you become a former partner the minute you file application for insolvency. Here, there has to be order for insolvency adjudicated as insolvent. Clear? Next, that is insolvency or death. Next, we will do minor section 30. Quickly, I will do all the points, guys. Okay. Section 30 minor of partnership is very simple. This says, whenever, can minor be a partner first of all? Yes. When I am the minor as a partner, what are my rights and liabilities? That is one question. When I am a minor, my liability is limited, liable only of the available property. You cannot become, when liability is limited, how I will become insolvent? So when you are a minor, your liability is limited only with your property, you can't become insolvent. What are your rights as a minor? Right to receive share of profits, and you have right to inspect books of accounts or filing suit for not obtaining books of accounts, but this can be done only when the firm is going to be dissolved. Are you following, guys? So minor has the right to inspect books of accounts and minor has the right to file a suit only when the firm is going to be dissolved. These are rights as a minor. Yes, correct. What is the other one? That one is next thing. When you become a major, what's the right? So when I am a minor, share of profits, inspect books of accounts or filing suit at the time of dissolution. Liability limited, property only can be used, can't be insolvent. Once you become a major, they are saying from the date of attaining majority or date of having knowledge that he is a partner, whichever is later, from this date within 6 months. Why it's it's not from the date of becoming major. Let's say on 15th August 23 I became major, but I didn't know I'm a partner. I knew I'm a partner only on 15th August 27 after 4 years. Are you following, guys? Look at this. In 2023 I became major, but only in 2027 I knew I am a partner. Then it is 6 months from 15th August 27. Are you following, guys? Whichever is later, within 6 months, you can decide. You need to give a public notice whether you want to continue or exit. If you continue, you have again rights and liabilities. If I decide to continue, my rights and liabilities. If I decide to exit, what are my rights and? If I decide to exit, it's simple. If I decide to exit, I have right to receive share of profits till the date of my exit. Anyway, public notice you will give. My liability is always going to be, sir, will it be limited till the year 2027? Yes. Because you were never accepted to become major. So if you decide to exit, from the start till the date of exit, liability will be limited, even though I am a major for 4 years. Are you following? Sir, what if the minor therinje pandran? That you have to prove. We are seeing law. If he is knowingly doing, I don't care. Are you following, guys? If you decide to continue, liability becomes from the start, from the time you are a minor. It becomes unlimited from your birth, from the time you became a partner. Birth means, I'm saying, imagine that you are there from that time. So it is not unlimited liability from the date of becoming major. It's not unlimited liability from the date of continuing. It's unlimited liability from the start. அது தெரிஞ்சுதான் you can take a decision. Knowing that only you are deciding, correct? So, if this is my timeline, I joined here as a minor, here I became a major, here I took the 6 months decision. From here I can decide to continue or exit. If I take the decision to continue, from here liability is unlimited from the first. Full period liability becomes unlimited. If you decide to exit, full period liability is limited. That's it. As simple as that. Clear, guys? What are the rights if you decide to continue? All the rights as other partners can share profits, books of accounts, mutual agency, everything. Like other partners, you have all the rights. Here there are 4 points in book. Go through this, go through this, go through this, go through this. And there are 2 more rights and liabilities as a minor. So 6 times you have to read 6 points, set of points. Are you following, guys? Anyway, I gave you notes over there. Everybody clear, guys? Understood? These are the points. I'm sure all of you will have the notes. Go through that. Clear. Done. Any doubts in minor? Okay. Next, minor is done. Acts done in case of emergency, implied and express authority. Okay. And liability of partner for wrongful acts of the firm. Okay. Now, this concept of implied and express authority. Here what they are saying, express authority means the partner can do certain things or he cannot do certain things based on the partnership deed. So that depends based on each partnership. Depends based on each partnership. Implied, in implied what is happening, if the deed is silent, the law talks about what you can do, what you cannot do by the default setting. If everybody is silent, default setting, law says implied what I can do, what I cannot do. Are you following, guys? Under what you can do, implied, when I say can do means what is the implied authority? Implied authority of a partner are just 3 or 4 points. He has right to sell goods, right to purchase goods, then accept payment from debtors and engage in discharge. Engage in discharge. That's it. That's all. Follow, guys. Implied authority. If everybody is silent, you have basic rights. ஒரு கஸ்டமர் வந்தாங்கன்னா கடைக்கு, you can sell the goods, sell the goods. I can also purchase goods. That's there. Hello. Buy is not there. I don't think purchase will be there. Check. It's there. Purchase. Buy and sell goods. So you can sell goods or buy goods. Accept payment. Sorry. Okay, I'll come there. Accept payment from debtors. If debtor comes to make the payment, I can accept the payment. I can hire employees or fire employees. Do you have one more point here? Fifth. For which point? Oh, this one. Okay. Additionally, borrow money or accept payment, both. Okay, correct. So additionally write down, guys. So what he can do is sell goods, buy goods, accept payment from debtors, borrow money, engage or discharge employees. If you don't want a specific partner to do this, what you have to do? Expressly remove the power. If one partner should not be able to borrow money, remove the power. That comes under express authority. If you are silent, he has these powers. Are you following, guys? Now coming to implied authority of what you cannot do. We will split these points into points related to court and point related to others. What are the points, guys? First one, submit, just key points. Submit, dispute, file a suit. He can file a suit. Next, withdraw suit, open bank account, then buy or sell immovable property, compromise in a suit. Next is relinquish a claim, enter into partnership. That's it, guys. 8 points I've summarized into 7. What he cannot do. First, let's finish the general points. What partner cannot do? He can't open bank account. He can't buy or sell immovable property. He can't enter into a partnership. Are you following, guys? Clear? These 4 points are related to the court. Court, now you can't file a case. You can't submit dispute on somebody. You can't withdraw a case which is already filed. So you can't file a case. You can't withdraw a case. Next, one case is going on. You are saying, okay, let's settle panni, let's close the case. That is called compromise in a suit. You can't go for compromise in a suit. And lastly, relinquish a claim. That means I am supposed to receive 10 lakhs in the case. I am saying don't pay. Are you following, guys? Let's say Mitansh has to pay me 10 lakhs. Firm has filed a case against Mitansh. Now, relinquish means I am saying don't pay, leave it, foregoing the claim. Foregoing the claim. So what I can't do with respect to court, guys? Submit dispute, withdraw dispute, compromise in a suit, relinquish a claim. Are you following? These 4 things cannot be done. Not only compromise a suit, one more, admit a liability. Admit any liability. Accepting defeat. Accepting defeat in a case. So what are the cases, guys? You can't file a case. You can't withdraw a case. You can't make compromise in a case. You can't forego, relinquish a claim, or you can't admit a liability. Everything related to a court. And these 3 points, open bank account, buy or sell immovable, enter into partnership. Do you remember these points? No. You have to remember, guys. These are questions which can come directly. They will ask, what are implied authority of a partner, which partner can do, cannot do. Write these points, write these points. Clear, guys? Now, I don't care what the partner can do or what the partner cannot do. In case of an emergency under section 21, partner can do everything beyond implied and express. See, emergency la I can do anything. They are saying partner should not keep hand in cash box. Fire came. Hey, I should not keep hand in cash box. Let the money burn. An emergency, I can do everything which is necessary to save the property of the firm. Following, guys. Next. Section 23 and 24. Simple concepts, guys. Look at this. Here, there are 4 partners. I will keep it very simple. Follow. 23 and 24. 23 is admission by partner. 24. Both have been tested in the past. Follow. Very simple. I generally give detailed examples, but very simple. Partners with four partners A, B, C, D. Tomorrow we are supposed to close the partnership firm because there is going to be a national wide band. Okay, band. Example, national wide band. So we have to close the firm. So the police came and told A, close the shop. A forgot to inform B, C, D. So A was leave next day. BCD came and opened the shop. Police put penalty on the firm. BCD are telling, hey, you didn't tell me. Can they give excuse? Giving notice to one person is deemed to give a notice to the firm. Are you following, guys? See, if announcement comes, principal in school will tell the teacher, that's it. Principal need not come and tell every student, hey, no school tomorrow, no school tomorrow. No need to tell them. Tell one person who is responsible. It's deemed as if you have communicated to everybody. Are you following, guys? That is one. Second is admission by a partner here. But here, what is the exception in notice to a partner? In case of fraud, if A intentionally did not intimate others. Intentionally I did not intimate others, so that firm suffers a loss. If A does fraud, then who is liable? A is liable. So admission by notice by given to a partner, notice given to one partner is deemed as if notice is given to entire firm, exception fraud. Clear? Admission by partners. Let's say ABCD is a firm which is selling cars. So I went to the firm, I went to B and I asked B, hey, I want to buy a new car which can help me in going in hilly areas, mountain areas. I asked C, okay. C told, buy this model XX7Z2 something XXZA model, you buy this. This is the best car for going in hilly areas. After buying that car, I found out in hilly areas only we should not use this car. We should use only in city. So I came back to fight with the firm. That time A told, why you ask C? He's a new partner. You should have asked me. So I put a case on the firm. Give me compensation for giving wrong car. Who will win the case? The customer or the firm? Customer. Because admission made by one partner is deemed as if it's made by entire firm. If you go to the firm, if she tells me something, it means whole firm told it. Are you following? So admission or representation made by one partner is deemed as if the entire firm made the admission or representation. Clear, guys?
What if in case of sleeping partner, if police informs the sleeping partner?
Correct. So in case of sleeping partner notice, exception you can also add sleeping partner, because sleeping partner will not be in management. Okay. So only it is, that's why the section itself is called what? Section 24. Notice given to a active partner. So section itself is called notice given to a active partner. So you can write exception is fraud and sleeping partner. Clear? Next. So we are done with this. Only one more point in unit 2. Unit 2 gets over. What is partnership property? In the partnership books of accounts, whatever is there in the balance sheet asset side is partnership property. Whether it's given by partners, whether it's given by bought by partnership itself or came by gift, I don't care. Asset side balance sheet, partnership property. Goodwill belongs to the firm, and personal profits, one concept we have. If the partner is making personal profits, what he should do? Return it back to the firm. If he is doing this profit secretively, he should not do it. He has to intimate the firm. Are you following, guys? Duty, one of the duties not to make secret profits. Are you guys following? Duty not to make secret profits. Okay. Next, last unit 3, guys. Okay. Dissolution is one set. Dissolution and dissolution without intervention of court. Let me do that full point. Guys, last 15 minutes we will finish. If you want to extend, I don't mind. I'll wait. 15 minutes, can you guys be silent? I know we've been there from morning. It is tiring, no doubt. But 15 more minutes, we can all go home. Or if you're going out somewhere, go there, no problem. Okay. Okay. Follow. Okay. Follow guys, quickly guys. I have a flight tomorrow morning at 11 a.m. I have class tomorrow 7 to 9 a.m. Quickly I go home, I can pack also, fast. Okay. Dissolution with court intervention, without court intervention. With court intervention, we have some 6-7 points. Section 44. What are the points with court intervention? Unsound mind, permanent incapacity, then misconduct, persistent breach of agreement, then continuous losses, then transfer of interest to third party, then just and equitable. Under just and equitable, we have few subpoints. Deadlock in management, partners not in, partners are doing gambling, loss of substratum. Follow, let me explain each of these points. You know what's unsound mind? Person not capable of entering contract. Permanent incapacity, permanently unsound mind. At least unsound mind can become sound mind later. Misconduct, full doing fraud and wrong things. Persistent breach of agreement, continuously doing wrong things, asking you not to do, don't do. Again you're doing the same thing. With court intervention means someone should apply to the court. If you become unsound mind, who will apply to court? If you become permanent incapacity, who will apply to court? Somebody else related to the partner's friends or family. Following practical solution. Continuous losses, no point of continuing. Transfer of interest to third party. The partner transferred his interest to some new partner without the consent of other partners. Other partners are not happy. 3 partners, A, B, C. A transferred interest to D. B and C is not satisfied. So firm will be dissolved. Just and equitable, deadlock, Sanda podran. Sanda podna, they are not talking, not in talking terms. How I will do business? Employee wants salary. A is saying give B. B is saying ask A. Deadlock means there are 3 partners, 4 partners, A, B, C, D. If you take any decision, you need majority to take decision, correct? A, B is saying yes, C, D is saying no. Equal, deadlock, draw match, okay. Gambling, if partners doing gambling, speculation business on stock exchange, loss of substratum means purpose why I started. The purpose why I started something itself is defeated. Are you following? Understanding, guys? Substratum means what is the purpose of life, they say. Purpose of partnership is this. Now, when the purpose only is not met, I started manufacturing masks and sanitizers because COVID came. Now, COVID is over. Still, I can't continue the partnership and keep manufacturing masks and sanitizer. Following, guys? All these points are examples of with court intervention. If you want to remember, each of this point is one Surya movie. If you see, okay. Continuous losses, which one? That flight movie. Okay. Next, misconduct, which one? Iron movie. Next, unsound mind, Gajini. Permanent incapacity, Pitamagan, you saw that movie, permanent incapacity. Next, persistent breach of agreement, Varanamayanam. That Samira Reddy will tell, don't follow me. Persistent breach of agreement. Are you following, guys? That one. Transfer of interest to third party. That's 7. That's Yela Mariva, where his power is transferred to somebody else. How you transfer power? Done, guys. All Surya movies are covered. Just in case if you forget, just and equitable, which one, guys? J beam. So you J beam if you see, okay. So example, you forget points means just remember Surya movie, you can fill few points. Fine, guys. Okay. I don't know if it's going to be helpful or not, but I'm just saying whatever I can make. Then just and equitable, these 4 points. Clear, guys? Hello, are you following? Just trying to make these mnemonics and few extra things. that can help you out. Sir, I don't like any mnemonic, I don't like any example. You study normal way, that's good, no problem. Whatever works best for you, do that always in life. Okay. Without court intervention. What is without court intervention, guys? Under that we have, come on guys, just 10 more minutes, we'll be done. This is the last big concept we have. Without court intervention, 4 sections, 40, 41, 42, 43. One will be voluntary. Nangle owner, we are closing down. One will be in case of death of all partners, close. Or insolvency of all partners. Then we have some more. Death of all partners except one partner. I have 7 partners. 6 died. What will one do? Convert to sole proprietor. Okay. Next is what, guys? Happening of certain circumstances or contingencies. For example, earthquake, like those kind of things. Then law, you have point for change in law. It becomes unlawful. My firm is dealing in tobacco products or dealing in some specific medicine. Tomorrow government ban tobacco or ban that medicine. Last one, voluntary, all the partners by giving a notice to the other partners. Are you following? Insolvency also. All partners become insolvent, firm is closed. Are you following, guys? Go through these points. Pretty simple, straightforward understanding. When firm is closed by giving notice, what is the date of dissolution? Letter, date, and then paragraph. Here also I can mention some date. This can be 17th Feb. This can be 18th March. So, date of dissolution is the date mentioned in the notice. Effective date. If no date is mentioned, then it's the date of notice. Are you following, guys? I will write this letter and tell from 18th March we are dissolved. Upon the date. Date lenana, date of notice. So we are done with dissolution by court is done. Dissolution without intervention of court is done. Last 3 sections. Liability of partner for act after dissolution. 45, 46 and 47 yet to be tested. And we have same thing. Payment of firm debts and separate debts. Okay. What is liability of partner after dissolution? I'll take all the concepts together. 8 minutes to go, guys. Come on. Okay. Now, once the firm starts dissolution, dissolution will not end on the same day. Are you following? You decide to become fit. Your mindset only changed. You are not fit. You have to, that mindset should remain like that for a long time. So when you decide to dissolve, firm will be wound up and it takes time. I need to sell the assets, pay liabilities. Now some less we'll put off easily. Assets sold, liabilities paid, over. I finished some in 30 minutes. This will take 30 weeks or even longer. Are you following, guys? This process of dissolution itself is huge, guys. CA inter-partnership, you have admission, retirement, death. Inter-partnership is only dissolution. The dissolution alone, some 40 sums will be there. 20 mark question. Types of dissolution. What happens if, because dissolution takes time, how much money I will get, I don't know. So there is something called relative capital method, piecemeal distribution. That one sum in interclass when I take, that one sum itself in every interclass I have taken takes 3 hours for one sum, 20 mark sum when I take that sum. Now what happened in new syllabus? Dissolution is removed in inter and brought to foundation. So I was talking to another faculty who was taking accounts also. I was telling, sir, have you seen dissolution thukina sir interla? Pa super sonar. Added to foundation. Then that faculty told, sir, ninga gali sir. Na start. He is not taking class for foundation, only inter and final. He told, Pavam sir, foundation pasanga. On the topic related to capital, how they will study. 3 hours. Inter ke puriyadu. Foundation eppadi puriyum. So, you have a choice. It's in your hands. Whether you can completely skip this topic or not. Come back, guys. Now, Dissolution. See, I'm just trying to motivate you guys. 30 days. Okay. See, I'm motivating you so you pass, so that you go to inter. You will not have this topic in June. Okay. That I'm saying in that way. You write in December 23, clear. Your inter is November 23. Dissolution not there. Partnership is not there for you guys. No need to study partnership again. Because inter it's removed. Really, I'm not joking. Okay. Sorry, November 24. I understand. Okay. Fine. Focusing on that, but not. Come back, guys. If dissolution starts today, winding up takes time. Somewhere I started, went off somewhere. Now come here, guys. Restart our 7 minutes left. Come. Now. Yes. Okay. Now, for dissolution, I have to do something. For example, imagine I decide to dissolve the classroom. Immediately I can't do it. First I need to go and end the rental agreement. Already some pending orders will be there. I have to close that off. I have to close the pending orders. Deliver whatever sales is pending. Manufacturing is continuing. I have to close that manufacturing slowly. So, section 45 tells liability of partner after dissolution. Partner has the power to do all those acts which are necessary for the purpose of winding up. I can't go and take a new bank loan now. But existing bank loan, I have to pay. Are you following, guys? Here we have some exceptions. What is it? In section 45. Now, here in that liability, the following people are not liable. One is estate of, then and sleeping partner. During this period of dissolution, whatever liability I have to pay, only the existing partners will pay. The following three partners are not liable. Estate of deceased partner is not liable for acts done during this period. Adjudicated insolvent partner is not liable for acts done in this period. Sleeping partner also is not liable for acts done in this period. Are you following, guys? Clear? Next concept, never tested. Payment of firm debts and separate debts. Okay. I'll give a simple balance sheet to understand this. Let's say company has fixed asset 10, current asset 8, then capital 3, SBI loan 10, partners advance 5. Okay. Imagine this fixed asset is given by the partner, this is given by firm. This liability is partner, this liability is firm. அவன் என்ன சொல்றான், first this partner's asset will be used for partner's loan. So this I will set off, this I will set off, I will have balance. Firm's asset will be used to set off firm's loan. I will have a negative 2. Now, liability side, okay, 2. So now to pay this 2, I can use this 5. And then balance for capital. So what is saying, partner's asset should be first used for paying partner's liability, partner's debt. Firm's asset should be first used to pay firm debts. Any excess after that can be adjusted to pay the other liabilities and the capital. Are you following, guys? This is payment of firm debts and separate debts, section 49. Quickly you go through section 46 and 47. It's just 2 lines in study mat, yet to be tested, but if it comes, if you see unit 3 of Indian Partnership Act, we actually finished fully. Because unit 3 has only 3 concepts, 4 concepts. It has registration of firm, procedure. They tested in June 23, so I don't care much. Apart from that, we have dissolution related concepts which we have done fully. That only up to an important question. What I didn't mention there, you can add is, what is the consequence of non-registration of firm? If you don't register the firm, what will happen? Correct? Consequence of non-registration, there are 4 points. Section 69. Section 69 talks about consequence of non-registration. In this it says, firm cannot sue third party. Third party can sue the firm. Partners cannot sue each other or the firm. Set off is available, not available more than 100. What is this logic here is, why sir firm can't sue third party but third party can sue the firm? Very easy. If firm is non-registered, in the eyes of the law, firm is not visible. Eyes of law, firm is not visible. So let's say there is a problem between Bala and Sanjay. Okay. Sanjay is the firm. Sanjay and Co. Bala is the third party. I am the court. I am the judge. Now Bala is coming to file a case on the firm Sanjay and Co. Can I see Bala? Yes. So I will accept the case. Third party can file case on the firm. Now Sanjay and Co. is coming to the court to file a case. I can't see you. Where are you? He's here. I can't see him because he is not registered. So in the eyes of law, firm is not registered, so I can't see him. So Sanjay is coming and shouting, sir, case podunga. I can't see you. I can't hear you. So firm can't file case on third party. Same way, firm kulliye sanda. Neenga sanda potukonga. Idhukku enkita vara. You know registered. Why do you want to come to me for solving fight? So partner cannot file case on firm or firm. Are you following? Last one, write off. Set off. Ide example, if Bala has to pay to the firm 150 rupees or let's say 1500 rupees, Sanjay has to pay to the firm 600 rupees. Normally what you will do? Set off panni, Bala will pay 900, Bala adu pannalam. Because Bala is third party, he can do that. Ide opposite. If Sanjay has to pay 1600 to Bala, then what he will do? I have to pay 1600, I have to receive 1500, adjust panni I will pay how much? Adu panna mudiyadhu. Because in eyes of law, I can only see that you have to pay 1600. I can't see that you can receive 1500. So the set off right of liability and asset will not be given for the firm. This also they have never tested the number. So set off is not allowed if it's more than 100. Less than 100, 50 rupees, 40 rupees, set off, enjoy. Are you following, guys? That too, why it's 100? Why here 100? Why Indian Contract Act race was 500? Why price competition 1000? Old act, not yet amended. That's it, guys. So with this, we are done with Partnership Act. Thank you, guys. Super. Okay. Super. Thank you. Done.